Okay.
Okay. Okay.
Yes, very good.
Ja, hei alle sammen. Da beklager vi at vi hadde litt tekniske problemer med å komme i gang. Men vi ser at nå henger dere med, og det er 27 stykker med oss i dette webinaret akkurat nå. Jeg vil ønske dere velkommen på vegne av hele Team Tavex her i Norge, på vegne av Haldor og Kristi og Milos og Aros og Ahmed, som noen av dere kjenner. Og som dere kan se, så har vi med oss Krasimir Petrov. Han er i Emiratene, der han jobber nå, i universitetet i Fujairah. Og vi krysser virkelig fingrene for at internettforbindelsen skal holde, for den skal visst være sensurert i Emiratene. Så det håper vi vil fungere bra. Vi også oppmuntrer dere til å delta aktivt i chatvinduet, fortelle til oss hvor dere hører oss ifra, stille spørsmål underveis, og spesielt på slutten, for vi har avsatt en del tid på slutten av webinaret for spørsmål. Som dere vet, så har vi invitert Krasimir Petrov til å prate om emnet krigen mot kontanter. Krasimir er kompetent fordi at han har undervist i økonomi og i finans i 15 år i 10 forskjellige land. Og han er også en privat investor som har store erfaringer med private investeringer. Så vi håper virkelig at dette blir et spennende webinar for oss alle. Den blir også tatt opp, så dere kan få linken etter at vi har fått gjort den i stand. Vi skal avslutte ca. klokka 8, slik som det var planlagt. Og helt til slutten så har vi spart 2 overraskelser. Her har jeg en liten overraskelse, som jeg ikke vet engang hva det inneholder. Den vil bli trekt ut til en heldig deltaker som er med oss helt til slutten. Og vi har også med et webinartilbud som vi informerer nærmere om på slutten av webinaret. Så vær aktiv, still spørsmål og vær modig. Og så håper vi virkelig at internettforbindelsen med Emiratene holder de 2 timene som vi har boket inn. And now, Krasimir, it's your turn. Welcome to us. Welcome to us in Norway. We are very happy to have you here, and we are very excited to learn from you. Welcome and good luck.
Thank you very much. It is a great pleasure, and I always enjoy when I present for Tavex. I presented 10 years ago already in Estonia, Finland, and I presented just before the stock market crash in February. I presented at the end of November. Again, I was in Denmark, and I presented also in Estonia and Finland. And it's a pleasure once again. So tonight, the main topic from what I understand is that we will talk about the war on cash and what's been going on in the world. And first of all, we need to spend about maybe 10, maybe 20 minutes to understand why there's a war on cash, what is going on, and what the reason for the war on cash is. And after that, I have prepared for you a 27-page slide presentation, 27-slide presentation. And the war on cash is based mostly on financial repression. That will be more than about half of the topic, and then the rest will be relatively easy. If you have any particular questions, I can sometimes see your questions when I'm in the chat mode, but usually I will be in presentation mode, and when I'm in presentation mode, unfortunately, I cannot see your questions. Maybe every 5 or 10 minutes I'll switch back and forth to see if there are any particular questions. I understand, unfortunately, only English, no Norwegian, so please communicate with me in English language. Now, should I begin and do screen sharing and turn to the presentation itself?
Yes, yes, please.
Okay, so I switch to screen sharing now. Here say share screen. Oh, the chat disappeared. Do you see now my financial repression, the slides?
Yes, we do.
Okay, well, tonight's topic is financial repression and the war on cash and gold. As you can see, my name is Dr. Krasimir Petrov, and I'm a professor in finance, associate professor in finance at the University of Fujairah in the United Arab Emirates. That's where I am right now, is about just 100 kilometers from Dubai. First of all, every time I try to prepare the war on cash, and I did it a couple of times before, it always boils down to the same thing. It boils down to financial repression. And financial repression is essentially has been a policy that has been used by governments for way more than a century. And it's an economic and monetary policy of negative interest rates for the purpose of providing cheap loans to businesses and governments and inflating accumulated debt. In other words, the main driver behind financial repression is the government. Usually government gets in debt, too much debt, and over time they are in trouble. They cannot service their debt, and therefore they try to cheapen their debt, and they do it in two different ways. Let's see. So, first of all, why they do it? What is the benefit of ultra low interest rates? Why do it? Number one, cheap borrowing. Governments borrow a lot and they love to borrow cheap. Banks, commercial banks are financed by cheap borrowing, and therefore commercial banks in general always have an interest of lower interest rates. Lower interest rates are benefit for commercial banks as well for the government. Low interest rates provide for easy borrowing. They basically, consumers can borrow more easily. Of course, banks and government, I said, can borrow more easily. Very importantly, businesses can borrow more easily. It appears that for everyone, low interest rates is beneficial, except that it's not, and I'll come to that a little bit later. The third main benefit is accumulated debts. It inflates accumulated debt. In other words, when the government generates inflation, inflation at the same time suppresses interest rates, and there is a double benefit. The benefit is, on the one hand, they pay lower interest rates, and on the other hand, they deflate the currency, they depreciate the currency, and they pay with cheaper dollars or with cheaper euro. So they deflate, we also say inflate accumulated debt. Lower interest rates stimulates consumption. With lower interest rates, people borrow money, spend it on vacation. Of course, they borrow money, spend it on cars. They stimulate investment. Businesses see low, cheap interest rates, they borrow. And low interest rates usually always result in real estate booms. And there is an extraordinary real estate boom now all over Asia, right where I am, right here in Dubai. But of course, there is a boom all across Scandinavia. Bubbles are extraordinary. Prices, real estate is overvalued maybe 3, maybe 4 times. Now, in a sense, to summarize, ultra low interest rates is like the Keynesian dream. More spending by the government, more spending by consumers, more spending by businesses. And the question is, if interest rates are so great, what is it not to like about super low interest rates? So it turns out that there is a dark side to interest rates, low interest rates. First, it destroys savers. You put your money in the bank and you get 0% or 0.1%. You get absolutely nothing. You want to invest your money in government bonds, and you get, if you're in the US, you're lucky. You get 2, maybe 3%. If you're in Europe, you get 1%. Basically, you get nothing. Second, much worse problem is that it distorts, low interest rates distort financial market signaling. The market's main function is to signal where things are profitable, where are profitable investments, and interest rates signals risk, and interest rates provide a signal on different risks. So when interest rates are low and you're barely getting 1% on your bond, what do people do? They take more risk. They invest in junk bonds. They invest in real estate. They invest in Bitcoin. They invest in stocks. In other words, it promotes all sorts of risk taking. Businesses say, oh, I can borrow for 2%. Businesses issue bonds, they borrow at 2%, they respectively buy their own stock. In other words, they use the money for stock buybacks, and the result is more leveraging. So the business will not have 70% debt and 30% equity. It will have 85% debt and only 15% equity. The business is a lot more leveraged and a lot more risky. It promotes speculation. As people can borrow cheaply, they use the money to speculate in all sorts of things, like Bitcoin, like real estate, like stocks, like everything. It promotes bubbles. Now, after so many years, like 17 or 18 years of ultra-low interest rate environment since 2001, the governments have blown all sorts of bubble. We have a real estate bubble, we have a stock market bubble, we have a bond bubble, we have a government bubble, we have Bitcoin bubble, we have everything bubble. Of course, it promotes indebtedness. People are in debt. Here, usually, even in the Middle East, people are extraordinarily conservative, yet they're in phenomenal debt. In my home country, Bulgaria, they're in phenomenal debt. When we look across the world, China, Japan, US, any country you look, Italy, of course, any country you look, they are at record levels of indebtedness. And low interest rates also signal false prosperity. People believe they're rich. People see real estate up, they think they're richer. People see stock market up, they think they're richer. It creates paper wealth, artificial wealth, and of course it crowds out private investment. In other words, people invest in all sorts of speculations, and genuine, true, productive businesses take a second place. So it turns out overall, when we summarize the advantages and disadvantages, that financial repression usually has more disadvantages than advantages. So how do governments do it? What are the mechanisms for financial repression? Again, I'm explaining, and I'm going to spend about 20-30 minutes on financial repression because it's the important connecting link to the war on cash. It's impossible to understand war on cash before you understand why they do it, why they have financial repression, and how. So how do governments do it? Number one, capping interest rates. They simply put a ceiling on interest rates. Number two, they will push through monetary policy interest rates to extremely low levels. Like Mario Draghi is pushing European interest rates to practically 0%. Second way that they do financial repression is through a captive domestic investors. They force banks and individuals to purchase treasuries. In other words, they say, oh, you have a pension fund. Pension funds must invest 50% of their funds in government treasury bonds. You have banks, and the government says you're required 20% of all of your assets to be in government bonds. And of course, that's not enough. Then the government says now you have to invest 30% of your money in government bonds. In other words, they force individuals, pension funds, mutual funds, banks, other financial institutions are forced to invest in treasuries. Capital controls. One very important mechanism for financial repression is to limit foreign investments. In other words, if your interest rates in Norway right now are 0.5%, it's more difficult, the government makes it more difficult to invest in other countries where interest rates are slightly more normal. So they limit interest rates. The example is right now China is limiting capital controls. People can't get their money out. A third mechanism is through inflationary expectations. People develop inflationary expectations. They begin to think that cash is trash, and they put their money in bonds, they put their money in stocks, they put their money in what the government recommends. Financial repression also is very important, that there is no escape, that you cannot escape into a foreign currency, that you cannot escape into gold, that you cannot get capital out. In other words, one of the most important characteristics of financial repression is to keep capital locked in and to keep it at extremely low levels. And there is also an extreme form of financial repression where governments introduce negative nominal interest rates. And this is where we get to the war on cash. It was in about 2011, 2012, when the Japanese were the first to introduce negative nominal interest rates. Later on, the Swiss introduced negative nominal interest rates, and eventually a few more governments introduced negative nominal interest rates. All right, so what is the goal? What is the purpose of financial repression? It is, first of all, they keep nominal interest rates lower. So, number one, low interest rate reduces debt payments. Negative interest rates, negative real rates will erode debt value. And the negative nominal interest rate will reduce the debt amount. So, debtors benefit. And the biggest debtor is usually the government. So, what does it mean financial repression? It can be interpreted as a tax on savers. You got 1 million in savings. Instead of earning 5% on your money, you're earning 0.5%. You earn, instead of 5, half, you're earning 10 times less. The second meaning of a financial repression is an inflation tax. You got 1 million saved, and if your currency loses 5% in value due to inflation, out of 1 million, you lost 5%, or you lost 50,000. And inflation and low interest rates, they act as a hidden tax, as a stealth tax. Not very many people understand the inflation tax. Not very many people understand why they're not getting a lot of good interest like they did 10, 20, 30, or 40 years ago. So financial repression turns out to be very common historically. I have not put it in the post here, but there was financial repression after the Civil War in the United States in the 1860s. Of course, there was a massive financial repression after World War I. World War I, most European countries had accumulated huge amounts of debt, and therefore they needed financial repression to keep interest rates ultra low so that governments can actually repay their debts more easily. Exactly the same happened after World War II. Governments all over Europe, including the United States, had huge amount of interest rates, and they needed low interest rates to be more easy to pay those debts. The third case was in 1970s, or actually late 1960s, were associated with US policy. LBJ's Lyndon Johnson, that will be a US president, who decided there's going to be a war in Vietnam and at the same time a great society. And the result was that the US government had an extraordinary, unprecedented debt up until that time. The debt was accumulated, and in the 70s, the United States had to keep artificially low interest rates and relatively high inflation rates, maintain negative interest rates in order to inflate their debt. Similar situation was after 9/11. Another example would be after 2008. There were lots of stimulus packages, there were lots of bailouts. These were in the trillions, and now they've been close to 15, 20 trillion. Some people estimate them up to 30 trillion. The estimation only for central bank stimulus is $20 trillion, or about 20 trillion euro. And there has been a post-bubble Japan. Japan had a huge bubble in the 1990s. The bubble burst in 1990s, and it's been now 28 years in a row. The Japanese government has had a policy of ultra-low interest rates, attempting to inflate all the accumulating debt, and in the process, they have been accumulating even more. So the question is, well, if you have a government policy of financial repression, who wins and who loses? And you can see on the right side, the losers. If you got cash, you certainly lose. Your cash loses value. If you have stocks during financial repression, stocks not always perform very well. Bonds especially do not perform well. Bonds do not perform well because usually inflation eats away the value of the bonds. Now, who are the winners? Usually gold. Gold is usually the best winner in a financial repression environment. Real estate is a good winner. It is not a coincidence that before 2008, there was a massive real estate bubble around the world, and the financial repression in the last 10 years resulted in an even bigger real estate bubble in most countries around the world. Financial repression is associated also with commodities, and usually commodities are winners, and foreign currencies usually win. If your country has a financial repression, you want to buy a foreign currency. Financial repression has two different types. It may have a negative real interest rate. This would be the case in the 1970s when cash loses value, and there may be negative nominal interest rate. I mentioned a little while ago that negative nominal interest rates were first time introduced in human history, have never been seen before 2015, 2016. And for the first time, the Japanese government, the Swiss government, and then a whole bunch of other governments have introduced negative interest rates with an attempt to deflate their debt quicker and faster. Well, if they pay you -1%, then cash protects your value. In that case, cash is good for you. So when you have negative real interest rates, cash loses, but when you have negative nominal interest rates, cash actually gains in value. So negative nominal interest rates, the simple protection from investors, besides you put your money in gold, is you just keep cash in the mattress. Let's see if there are any questions. I need to pause. Any questions at this point in time?
But at the moment, as we can see, but maybe somebody dared to ask now.
No questions for the moment. Okay, well, let's continue with financial repression. Okay.
There is a question from Raymond.
Okay, it's a very good moment just to pause. This is all the foundation and understanding what financial repression is. And then I have about 10 slides on the war on cash. And then I'll have a few more slides specifically to Norway. Let's see if there are any particular questions.
Yes, Raymond has posted a question, and as Andre as well. Can you see it, Krasimir?
Well, let me see.
Catherine, there is 2 questions.
Chat. I'm opening a chat right now, and I'm looking at the chat. I'm reading from Raymond. US has big debts, and their debts are still rising. Yes, I agree. Yes, it's absolutely true, and they are rising at the fastest rate in American history. Their debt is increasing every year, correct? And I will add an accelerating rate. Yes, but nothing happens. Absolutely true. And the answer is nothing happens because the US government has suppressed interest rate to 1% up until recently, and therefore nothing happens as long as interest rates are low. Correct. We have heard of Dr. Doom. That will be, I assume, my good friend Mark Faber. We spent a lot of time in Thailand with him together. And other professors giving us warning for the rising debt all over the world. Yes, very true, correct. They have all warned, me too. But we can still see economic progress. Correct, incorrect. We can still see economic progress. I hope everyone can hear me. No, not true, not correct. We're not seeing economic progress. We're seeing false prosperity. This is my slide where I explain that the artificial consumption, artificial investment, artificial government spending leads to an artificial boom. And it appears to be an economic progress when in reality it is not true. It is not an economic progress. It appears to be an economic progress as long as in Europe Mario Draghi keeps interest rates up until 0.5% or 1%. Now, all these people, professors said that people should stay away from the stock market every year. Yes, they've said it, absolutely true. And that the gold silver price is not falling, okay? So these people have not been investing in the stock market, have not been so smart. Again, the answer is yes and no. With the benefit of hindsight, it is true that they have not been so smart. But at the same time, we saw what happened in February. Again, a crash can occur in 2012, it can occur in 2014, it can occur in February, and again, it may occur next week or next month. So it is true with hindsight that the stock market had provided a good return, but again, we still, the risk is extremely high. Again, stock market can crash, and it did crash 10% in 1 week. And again, it may crash 50% literally in 3 days. And if it crashes 50% in 3 days, at that point, it may not look so smart. Let's remember, it is a reminder, and this is where the argument is correct. In 2004 and 5, people said there is a real estate bubble and real estate will crash. And people were wrong in 2005, but there was a bubble. People made profits in 2005, and they made profits in 2006, and they made profits in 2007, and they made profits in 2008. And for all of these 3, 4, or 5 years, people were wrong until in 2008, the real estate bubble burst, and then they turned out to be right. So just because the market is overvalued, it is very hard to know and to say when the bubble will burst, when the stock market will crash, okay? So the question is, why do governments do this to us? Why do governments do this to us? I already had a slide which explained the benefits for the government. Maybe I think I can go back to slide benefits. So why governments do this? You can see the benefits are on slide number 3, because it's cheap borrowing, easy borrowing, stimulates consumption, investment, real estate boom. So these are the reasons why they do it. Let me read one more.
Krasimir,
yes?
Maybe
yes?
you will explain more why governments need to do it.
Yes, they need to do it very simply because if they pay 1% interest, let's say on US debt of $20 trillion, their interest payment will be $200 billion. And governments can pay, the US government can afford to pay 200 billion. But if the US interest rate would be 5%, 5% on 20 trillion debt, they'll have to pay $1 trillion US. $1 trillion the US government cannot possibly pay. The US government will accelerate into bankruptcy in a matter of just a few months or a few years. But they can still afford to pay the 200,000. So they need to keep the interest rate. It is even more extreme the case of Italy. It is equally extreme the case of Greece, the case even of France. France is a huge debtor, people don't know. A much bigger debtor is Spain, Portugal, and Ireland. These countries desperately need only 1 or 2% interest rates. They cannot pay 7 or 10. Let's explain again. If interest rates rise like they did to 7 or 8%, we had the European financial crisis of 2011, 2012. Greece was on the verge of bankruptcy, and so were soon to follow Spain, Portugal, and so on. So just a short, small rise in interest rates drives governments into bankruptcy, as we saw recently with Greece, if that answers the question. Okay, so how do foreign currencies protect against repression? Okay, when all currencies are derived from the US dollar, the short answer is, unfortunately, they don't. If all currencies are derived from the dollar, then you're not protected against financial repression by any other foreign currencies. You can be protected against financial repression only with gold. Gold is the only. Now, I will explain how do foreign currencies protect against repression. Example, Japanese yen. Japanese government has been implementing for 27 years hardcore financial repression with extremely low interest rates, okay? And it would have been beneficial, indeed true, to invest in foreign currencies like the dollar, later on in the euro. And if you were a Japanese, you would be protected from the financial repression of the Japanese government. And there may be some other developed, less developed or developing governments that would be protected if you protect yourself from the dollar. So there may be cases, but if they're all derived from the dollar, unfortunately, the only meaningful protection is gold. So any currency that appreciates against the US dollar tends to get weakened to prevent it to get too strong. Yes, to lose exports. Correct. This statement is absolutely correct, and this is related to currency wars. Currency war is associated with a government devaluing its currency against other currencies in order to make their export more competitive. Biggest for the last 10, 20, 30 years, well, for the last 60 years has been Japan. For the last 30 years, China has been always accused of keeping its currency artificially low in order to promote its export. The third has been always South Korea. They always keep their currency low. And as soon as some other currency falls, they immediately lower their currency, and it's a race to the bottom. This is where now, and I highly recommend for people to read Currency Wars by Jim Rickards, where they can understand this is the third currency war. There have been two others where it's an ongoing currency war, where every government is resorting to devaluing its currency, and the only way out of the currency wars is gold. Of course, the second good alternative is real estate, but with real estate so grossly overvalued and with real estate bubbles all over the world, now the only good, solid, meaningful alternative to these currencies is gold. Unfortunately, that is the case, and that is true. Okay, any other questions or comments, or I can continue back with now the topic of the war on cash? Any other questions? Any comments, or continue?
Can you repeat the name of this writer?
The writer, I will write Jim Rickards. Currency Wars. Great book. I highly recommend it.
Thank you.
It's a small book, 250 pages. It's very quick, very easy read. Okay. What about silver? If I understood the question correctly, yes, silver has been for the last 10, 15, 20, even 30 years has been significantly undervalued relative to gold. And it is true, an asset can be 10, 15 years undervalued relative to gold. And yes, personally, I believe silver has a lot more profit potential. In other words, I do expect that when gold and silver rise, just like they did from 2001 until 2010 or 2011, when they both peak, on the way up, silver always goes multiple times over gold. So if gold goes up by 7 times, silver goes by 20 times. If gold goes by 3 times, silver goes up by 5 times. But silver also goes on the downside a lot more. So as I believe that gold and silver have gone down for the last 4 years, we've reached the bottom about a year and a half ago. And as I believe that we're on the way up, I believe that silver is a significantly better investment over gold. I actually recommend silver more for its speculative potential, but gold is a lot better, a lot safer investment. So, for example, when silver crashed from $50, it crashed down to 12 or 13, I don't remember. It crashed 4 times. Silver lost 70–75% of its value when gold was down only 40%. In other words, silver goes a lot more on the way down and goes a lot more on the way up. But I do believe that silver has a better speculative potential. People should keep as a protection more gold, and silver should be only the king. Next, can President Trump save the US economy by returning the USD to the gold standard? The answer is yes and no. There is no way to save the US economy. The US economy needs to go to the complete restructuring of the economy. The currency needs to crash, the government spending needs to collapse, all the assets, stock market need to be devalued 5 or 10 times, real estate is overvalued, need to be devalued 3 times. In other words, there are disproportions in the economy, and it is impossible without going through a major economic depression. But the depression itself, just like the one from 1929 until 34 or 36 or 42, the Great Depression lasted anywhere between 5 and 15 years, depends on how you count it, is the time that will readjust the economy. So there is no way to save the economy. Not Trump, not anybody. The US has wasted its wealth. It's all spent. It's all squandered. The banks are empty. They all have debt. It's all paper. And therefore, there is no saving. Now, exactly when and exactly what will be the bust is hard to predict. It's a very different subject. Could be an inflationary bust, could be a deflationary bust. But going to the gold standard will be a new solid foundation for the next 10, 20, 30, or 40 years. But the transition period will be associated with a major devastating economic consequences. Same applies for China, same applies for Japan, same applies for Italy, even for France. Of course, the same is for Greece, Spain, and Portugal. Let's see, more questions, or I go back to the currency wars? Maybe go back to the currency wars?
Yes.
So not currency war on cash. So financial repression, war on cash. So why is the war on cash so much important? And the answers I gave in the previous slide. This is the slide. It's the negative nominal interest rates. When the governments want to impose negative nominal interest rates, people can protect very simply by holding cash in the mattress or in the jar, okay? The policy does not work and cannot work if people don't have cash, meaning they have their money in the bank or in the stock market, then the policy works. Therefore, for this policy to work, governments must reduce the cash holdings. They must increase, therefore, bank holdings, in other words, bank deposits and bond holdings. In other words, if you got your money in cash, the policy doesn't work for the government, you win, the government loses. Now, if you don't have your cash and your cash is in the bank or in bonds, you lose and the government wins. That's why the war on cash becomes a necessity. Since the negative nominal interest rates were introduced in 2015, it was immediately noticed that as people hold cash were protected. In 2016, there has been a general offensive for governments to do that. Now, here's a chart which shows exactly what I was explaining. In 2015 or late 2014, you see December, were the first government bonds that were yielding negative interest rates. In 2016, there were about 1 trillion. And as the chart ends, they were 5 trillion. Right now, we have an estimated of over $10 trillion equivalent that have negative interest rates. For a while, even German bonds were yielding negative interest rates. And if you're a German and keep your money in cash, in euro, well, you don't lose. So that's the reason for the war on cash. So again, the war on cash, foreign currency protects against asset, but now domestic currency also protects you. You just keep your money in cash. So what the war on cash is simply an extension of financial repression. It's a further, deeper, when you just don't impose low interest rates, but the low interest rates go into negative territory. It further is an extension of capital control where you restrict not only foreign currency, but the government must restrict domestic currency too. And this is what the war on cash is. So what are the goals? Of course, to make the financial repression more effective. And another goal that may be hidden and it's not advertised is that they want to prepare the banking financial system and the government, excuse me, for a monetary reset. Now, what does the monetary reset mean? A monetary reset simply means that when things go horribly wrong with the banking system, they can shut down the whole financial system and reissue a new currency or replace one currency with another currency. So it is believed and it's actually expected that as people begin to panic and there's a stock market panic and so on, example, Cyprus, just a few years ago. Example, Greece, just a few, 3-4 years ago. They can shut down the banking system and then they restart the whole financial system with a new currency, replacement currency, or different things. But for this to work, cash has to be in the banks and not in people's pockets. So, how is the war on cash done? Number one, legal restrictions. You want to buy stuff? You cannot, for example, in my home country, you want to buy a car for more than 5,000 euro, you got to make a bank payment. You want to buy a house, property, you got to make it through the bank. You got to put your money first in the bank. Number two, pure propaganda. Governments tell you that terrorists use cash. Government tells that criminals use cash. Government tells that tax cheats use cash. That's exactly what the Norwegian government was telling their own people just, what is it, a few months ago? I'll have it in a later slide. Of course, they make a war on cash by making cash inconvenient, by removing large denominations. So you want to make a large payment, you need a big stack of money. And of course, by introducing fear. They say, oh, you can keep your money in cash, it can be lost, it can be stolen, it can be eaten by mice, it can burn, it can happen a lot of things to your cash. If it's in the bank, it is safe. Of course, that's also part of the propaganda. So that's how governments do it. So, example with transaction restrictions, EU had proposed, and recently the legal limit is 15,000, and they proposed to reduce it to 10, but hasn't been introduced. Spain has been desperate and gone down to 1,000. France is down to 1,000. Greece is currently up to 500. Germany was down to, it was to 15 and proposed 5,000. So, which are the countries that are the leading countries in the war on cash? Well, Sweden, Norway, and Denmark. These are the countries that are farthest. Now, the government may be more subtle. Sometimes they make it simply through preferences. You like it. It's more convenient. So what about war on cash? Let's see. Let's pause here a second. Short pause. I got 7 or 8 slides, and see, are there any particular questions related to the war on cash before I move to the war on cash and what I have in seen in media? All right, so how about Norway? I don't understand the question. How about Norway? That's from Christer Olden on 948. How about Norway? What? Currency, debt, whatnot. Do you really think that we will go back to the this gold standard? No, I never said that we will go back to this gold standard. No, I never said that we will, because US government does not want gold standard. German government usually doesn't want a gold standard. The British government certainly doesn't want gold standard. Japanese government doesn't want gold standard. So most governments around the world don't want the gold standard. They hate gold. Gold imposes discipline. But when confidence is lost, usually gold is the main means to reintroduce. So they don't want it. They don't like it. They'll try to make a reset, and they'll try to attempt the reset without gold. But in the meantime, gold price goes up. In the meantime, gold goes up. And I can explain a lot more on gold a little bit later. I like to talk a lot about gold. I've been diligent student in gold about 16 years or 17 years in gold. So when not, if as I understand the global crisis appears, in what way will Norway be affected? Also, simple question. Was, Norway affected during the global financial crisis of 2008, 2009, or 2010? If you have exports, most or all exports will be affected. If you have tourism, most or all your tourism will be affected in any way. In other words, Norway will be affected pretty much like any other country, pretty much like Denmark, like Sweden, like Finland, like Germany. Norway will not be in any way spared, even though economically it's amazing. Norway is one of the few governments in the world that has relatively high savings, relatively high pension fund that have accumulated real savings as opposed to paper saving. That's a different topic. But anyway, Norway will be affected pretty much just as badly as most other governments will be affected. Again, crisis will come. It's extremely hard exactly to pinpoint the timing. That's a very different topic. All right, maybe move again. Maybe move on to the presentation.
Maybe I should confirm something to you, Krasimir. Last summer in 2017, we got the new anti-money laundering law in Norway. And we are not anymore allowed to receive more than 40,000 krona payments, for example, also for gold and silver and for car and for bigger deals.
Yes, of course. This is part of the war on cash. All right, so what's going on, particularly as Norway, Finland, Sweden, especially in Denmark, the leaders, what do? Number one, rapid shift to digital payments. Governments encourage digital payments. Government forces employers to make digital payments. In other words, salaries will be deposited in a bank. Okay, conservative government, conservative party proposed to eliminate cash. Yes, there have been some changes, some development. The government, or at least says that they want to introduce mandatory online billing, which means that you're going to get billed online and then you have to pay online. Turns out that the biggest supporter for all the war on cash is the Norwegian Police Federation. They say, yes, these are criminals. We want to reduce it. As I already mentioned, and it's very important to understand, I believe I have an extra slide, is quite a few banks like DNB and Norge already refuse cash. They already are in strong support on the war on cash. The banks, particularly, of course, with the government, they want to eliminate the 1,000 kroner banknote. Now, I don't say they will, but they want to. They desire, and they are likely going to do it. And one way to do it, they'll simply stop issuing the big banknote, and over time, the banknote will slowly disappear from circulation, okay? But at the same time, banks have a war on Bitcoin. They hate it. Again, I'm not saying Bitcoin is great. I'm just saying is that as soon as there is competition, immediately they say it's bad, it's evil, and they immediately fight it. What about Norges Bank? Specifically, it claimed that 50% of cash transactions were outside the bank's control. And they said, well, we are not controlling cash and we're not controlling 50% of transactions. In other words, the central bank and commercial banks are worried that half of the transactions are not under their control. Well, basically they want control. They want power, and they get power through control of money. Okay? And they say, oh, it could be used under the table money. It's used for money laundering. And of course, they say very clearly, they want to track money. Well, do you want your money to be tracked? Again, it's a question for you to answer. So, it turns out that when it came to war on cash, banks in Norway, as well as in many countries around the world, they love the war on cash. They support it. Why? They support it because it keeps your money in the banks. They want your money to be in the bank. And the bank pays you nothing. It pays you zero right now. It prevents bank run. If your money is in the bank and you cannot have cash and you cannot withdraw cash, it is impossible to have a bank run. Right now, you can go in the bank and maybe take your money out. But if you're in a cashless society, you cannot take your money out. So the banks love it. The biggest risk for a bank is a bank run. Next, it allows banks to charge you negative interest rates. Great, banks love it. For every little transaction, every little payment, they charge you a transaction fee. Banks love transaction fee. So you want to buy yourself a coffee or whatever, you pay a certain amount, let's say €2, the bank takes its own little cut of 2 cents or 2 euro cents. Oh, if your money is in the bank, they will introduce bail-ins. This means that they will take a cut from your deposit to compensate the bank for bank's bad lending. That already happened in Cyprus. That already happened in Greece. This is the blueprint to be happening all over Europe. Italian banks are next. So that if your money is in the bank and I got to claim, let's say, €200,000, they say, well, you're losing 20% of your deposit is a bail-in. And it allows taxing every transaction, okay? And it cuts cost on handling cash for the banks. Handling cash for the banks is a relatively expensive operation. They got to feed the ATM machine. They got to transport cash from the main office to some other branch. In other words, cash is associated with logistical operations, with security, with the cost of robbery, theft, insurance, and handling cash has some costs. If the society is relatively cashless, it cuts on those costs for the banks. And of course, it reduces the risk of bank robberies. The bank wouldn't have a lot of cash either. So banks love people not to have cash. Banks love and support the war on cash. And these are the 7 or 8 main reasons why banks support it. All right. Well, the war on cash. Countries with highest holdings of small dollar bills. Surprised. I was honestly, I admit, very surprised when I found the statistics that the countries which are farthest and most brutal with the war on cash and financial repression. Number 1, the biggest has always been Japan, has the highest holding on small dollar bills. In other words, turns out that the government imposes a financial repression on savers, and the Japanese turn out not to be stupid. They hold dollars. Turns out Norwegians aren't stupid either. There's a war on cash and financial repression. What Norwegians do? Hold cash. I was very surprised when I saw that the top 3 countries in the world are Japan, Norway, and Sweden. And this is exactly what people do. They protect themselves. And this is where we see a good illustration. The bigger and the more massive is the financial repression, the more people respond. Next, it turns out that if cash is a protection in financial repression and the war on cash, gold is an even better protection. And gold protects even better than cash. Now, silver is a separate subject I don't want to get into right now. And therefore, during a war on cash and a war and financial repression, gold is an even better way to store your money. Now, I'm not saying invest everything in gold. I'm saying no, you should park a good chunk of your savings, 10, 20, 30% in gold. You should park a good chunk of your savings, 10, 20% in pure cash, and then you invest the rest in whatever that might be, real estate, stock, bond, and whatnot. I am for, and I can explain later, another topic for another time, diversification. But you need to have a good amount of your assets, good amount in cash in gold, 30, 40% out of your total assets. So gold is an outstanding protection. It protects against financial repression, and it protects against equally well against the war on cash. So the war on cash has certain mechanisms. Of course, purely legal. Government just prohibited, like the US prohibited from 34 to 73 for close to 40 years. Just propaganda. I was amazed. I mean, it's a great story. I had a while in 2002, 2003. I had some gold in the United States. I left it with my brother, just a little bit, a small amount of money. My brother is scared. He thinks it's dirty. He thinks it's criminal. He thinks it's something wrong with it. He doesn't want to touch it. He doesn't want to see. He doesn't want to say, hey, my brother, can you go and sell my gold and, you know, just get the cash? We're talking about a small amount of money, like $5,000, $10,000, a small amount of money. He doesn't want to do it. He's scared. He thinks that there's something wrong with holding gold. He's scared. He says that he will be immediately a suspect for something like that. He doesn't want to touch it, all right? He says he doesn't want to see it. So it's very important to understand that propaganda works, and it works for most people. And most people, when I talk, they say, no, I don't want to touch gold. No, I don't want to hold it. No. And of course, gold is manipulated to scare investors out of gold. It's in the last 3 or 4 years, a lot of people got scared. They had invested in 2007, 8, 9, 10, 11, and then they got scared out of gold. And of course, one of the best mechanisms to have a war on cash is keep people ignorant. It's not in the media. It's not in the textbooks. It's another topic for another time. When I was teaching international finance in 2007, I was shocked to discover that everything that the textbook in international finance by Paul Krugman, everything it says on gold is wrong, dead wrong. It's unfortunately, but that's the reality. Another topic for another time. And of course, the simple mechanism for the war on cash is just confiscation, just nationalization. And as it happened, believe it, just recently in 1997, during the Asian financial crisis, when the South Korean currency crashed, they appealed to the patriotism of South Koreans to help their own country and to deliver their gold to the government to help them raise hard currency gold and in order to stabilize their currency in the financial system. So they say, if you're a true patriot, you will give your gold to the government, and patriots buy gold. And they say, if you're a traitor, you hold gold. That's actually, of course, propaganda, but governments use it, and it works. It works for 80 or 90% of the people. During the Great Depression, 33, 34, when Roosevelt appealed to most Americans to return their gold, they trusted the government. They went in, they returned their gold to the government, and they realized that a few months later, the government turned on to them, devalued their gold, devalued their dollar, and they turned out to be cheated by their own government, just like it happened with the South Koreans in 97, 98. So, different mechanisms for the war on gold. It is not yet going aggressively, but as gold, the price of gold begins to rise and keeps rising in the next couple of years, there will be more on the war on gold. The war on gold is coming, not yet raging, but coming soon. And what's the conclusion? Well, please take a look at government debt. In 2002, the box on the left, you can see that overall debt for ex-China, China, US, and so forth, you see has been 246% of GDP, the respective GDP, and it's $86 trillion in US currency. By 2007, government debt has grown to 149. Now, sorry, 2012, debt is 205 trillion, at 300%. By 2017, and this is a slightly older, is 330%. Now, at the beginning of 2018, the estimated number is 350%. In other words, debt keeps rising and rising and rising and rising. Low interest rates no longer work. Government need to shift to negative interest rates. I showed you the chart from 1 trillion to 5 trillion to 10 trillion, and more debt turns into negative territory. So there will be more necessity for a war on cash, and later on for a war on gold. And again, to conclude, 1 or 2 more slides. Total global debt is still rising and keeps rising. Financial repression must necessarily intensify. The war on cash is just beginning and will intensify. The war on gold is just starting and will intensify. And therefore, what's the recommendation? Simple. Have gold, keep it outside the financial system. Bury it in the ground, put it somewhere in the chimney. There are hundreds of ways to hide gold and hold cash outside the financial system. It is as simple as that, and you'll be relatively protected. Of course, you can keep some gold in the bank vault, you can keep some cash, but you should have most of your gold in cash outside the financial system. Of course, you can still invest in some gold, some stocks, some bonds, of course, some real estate and what. And this is it. Thank you very much for your time. And let's see what questions you have and where you want to lead the discussion. Maybe you can introduce some other people. Let's see. First of all, let me read. I'm reading 1001 from Andre. We must take away the bankers' ability to print money. Would you agree? Yes, of course, I agree. We have to limit them, but the bankers love it. And it's not exactly the bankers, it is the government. Governments are in debt and governments finance their spending with printing money. So it is an unholy alliance between governments and banks where they jointly create money. Governments the printing money and banks through deposits, and they both benefit at the expense of people. Yes, we have to do that, but they will fight us, okay? And they will not agree. So even after crashes, then they create their fortunes by printing more money. Yes, absolutely correct. This is exactly what they do. They print more money. That's why for the last 5, 6, or 8 years, the rich are getting a lot more richer because they print the money and then they pour it into the government, they pour it into the financials, into banks, and then they channel it into the financial system and drive stock prices up, drive bond prices up, drive assets up, and the rich get richer and the poor get impoverished. Absolutely true. Next, Raymond. I think that Norway will not have any big problems. I will have to, unfortunately, per my personal opinion, is disagree. At least let's say we have all this gas and also this black gold. I'm sorry, not true. There are many countries that had a lot of gas and a lot of black gold, and during the global financial crisis, they suffered, and they suffered bad. And again, just having the gas and the gold, it is not sufficient protection, even if you have it. And again, Saudi Arabia had it, but it didn't. And again, during a crisis, demand, especially global financial and economic crisis, demand for black gold goes down, and it goes down a lot. And please, a reminder, maybe you just forgot that just a few years ago, just 2 years ago, oil crashed down to $26. And for oil exporting countries, that was a complete disaster. Please do not think that just because you have the oil that you're protected. Yes, if you have a gold and have a gold in the central bank, you are protected. But having the oil, you're not protected, okay? So these are my thoughts, whether you agree with it. President Ronald Reagan once said about gold in US Treasury, we don't own a single ounce. Are the US vaults completely empty? Yes, I am of the opinion, and I have studied for the last 15 years the research of GATA, and I've read thousands of articles, and I do believe that US vaults are mostly empty, probably 90 to 95% empty, and I do believe that most of the gold bars are there, but they're gold-plated bars, that they're tungsten bars, tungsten, I think wolfram, and that these are tungsten bars which are gold-plated, so that 95% of the gold is actually fake gold. I believe that. There has never been true, genuine audit, I think, for 60 or 70 years, so nobody can know. They will introduce people to the vaults, they will show shiny bars, but you're not allowed to drill through the bar and see, is it tungsten or is it real, genuine gold? So the short answer is we don't know, but there is significant evidence that a lot of gold has been leaking out throughout the decades and that there is little to nothing. Okay, country which is most healthy economy in Europe? Oh, that's an easy answer. Norway. Norway has the highest savings rate, well, with Denmark too. The government has the relatively low debt. Norwegian kroner is relatively one of the most stable, or actually most solid currencies in the world. And it's definitely better than euro, definitely better than the US dollar. So in a sense, the currency is one of the best in the world, but again, it doesn't mean that you have a good protection. But the Norwegian kroner is a very good diversification currency. In other words, you should hold some euro, but not too much. You should hold some dollars, but not too much. You should hold some Norwegian kroner, but not too much. And you should have an about equal amount of gold, maybe even twice or 3 times more in gold. My ratio for me, gold to currency, is about 5 to 1, 8 to 1. You know, I keep the bulk of it in gold and some silver. All right, let me read. We're supplying you with oil and gas. Okay, you will not have this gas from Russia in the future. Yes, that's true, correct. I don't deny that. But if the price of oil or gas falls significantly 2, 3, or 4 times, you might not be profiting a lot. Just because you pump it and just because you sell it does not mean that you profit. Example, Iran. Example, Russia. Their costs of producing and delivering it so high that at current pricing they're making almost nothing. Just having it is not good enough. You should be able to pump it at $5 per barrel and sell it for 45 and pocket 40. Now there's only one country in the world that has a $5 gas, and it's Saudi Arabia. Does anybody in the audience know what is the cost of Norwegian oil per barrel? In other words, maybe it costs $40, and now at 46, you're making only 6 per barrel. Okay. If anybody knows, or if anyone has a little time to say cost of barrel per oil, and you will see exactly what I'm talking about. Next, why keep cash outside the banking system if inflation steals its purchasing power? Yes, thank you, Robert. You should not be keeping a lot of cash. You should be keeping mostly gold. If you keep doing this with gold and silver, yes, absolutely, correct. You're correct. As long as you have an ongoing inflation, cash is not a good protection. Gold is an infinitely better protection. You're absolutely correct. This is exactly my reason why I said I'm keeping 5 times more gold and 5 times less cash. Yes, I'm just making an example, not true, not real numbers. If I'm having 50,000 in assets, 40,000 I'll keep in gold, and 10,000 I'll actually do keep in cash. Yes, absolutely, you're true. You should keep in cash, but not too much. A small amount is reasonable. Let's see. Doing this in gold and silver, incorrect. Okay, are you protected with silver? The answer is yes. Silver provides a very, very, very good protection. In some ways, silver is a better protection. So I do believe that you're equally protected with gold and silver. Silver provides, on the way up, a lot better upside, but on the way down, as it happened between 2011 or 2012, 2016, it falls on the way down. So you're protected, but gold provides this more stable value. If you need, for some reason, to sell quickly, you may have to be forced to sell silver at a greater loss than gold. So I actually would say it is much better for you to diversify. You keep half of it in gold and half of it in silver. Now, I personally recommend keep, let's say, at 100%, keep, let's say, 60% in gold, 30% in silver, and in cash. This is just a recommended proportion, and you can adjust a little bit. All right, again, if I bought gold in 2012 and I would have had 11% profit in these years, I don't think we Norwegian is satisfied with so low profit. Well, this profits could very likely look absolutely fantastic and an amazing return if you got a 60 or 80% stock market crash. If bonds fall 30 or 50%, if your real estate crashes 50 or 80%. Now, my understanding from my own research is that Norwegian, I was already in Copenhagen, real estate's about 3 to 4 times overvalued. If real estate falls 50, 60, 70%, so you get a minus 60%, 11% plus sounds good. Again, I'm not saying it's great, but again, you cannot just look at one little period. You also have to look at the risk for the same period of time. And that's why I'm saying this is the purpose of diversification. You're gonna have some part. Let's try and clarify the so-called Jewish rule. The Jewish rule is the following: you keep 1/3 in cash, you keep 1/3 in gold, and you keep 1/3 in real estate. Well, the modern rule is you keep 1/4 in cash, you keep 1/4 in gold, you keep 1/4 in stocks, and you keep 1/4 in real estate. And you're well diversified. Yeah, gold may be down, but you're gonna make it on real estate. Yeah, stocks may crash, you're gonna make it up on gold. That's the proper way to go about. Now, can you say something about the near future of the Norwegian housing bubble? Again, I can explain. That's a very good question. It is extremely hard, absolutely impossible to time the bursting of a bubble. Yes, it's a bubble, and bubbles tend to grow and grow and grow until they crash. And it may crash in a month, it may crash in a year, it may crash in 2 years. Hard to impossible. It may be a global financial crisis that will trigger the crash. It may be an internal problem. It may be a whole bunch. How, when a bubble bursts, it is next to impossible. I have never seen top professionals being able to decently well pinpoint the bursting of a bubble. This is the hardest job. But you just saw what happened with stocks. You saw them on, there was a little scare on February 2, and on February 5, huge crash. Then 2, 3, 4 more days, a nice crash. And that's, again, just a 10% crash in a week, and that's nothing. You could easily get a 20% crash in a day. You can easily get a 50% crash in a week, okay? Again, these are extraordinary risks. And again, you're playing with fire. And again, I'm not saying don't invest in stocks. I'm saying Don't invest 80 or 90% in stocks. That's foolish. I'm not saying don't invest in real estate. I'm saying stick to 20, 30% in real estate. Okay, 40% in real estate, but stay diversified. That's extremely important. Next, silver, the same period. Yes, that's true. That's why I'm saying you need to be diversified. Yes, gold and silver are a little bit down, but stocks went up. Well, stocks went down, and yes, that's a very interesting observation from last month. During the big stock market crash, we're talking about February 5 to February 8 or 10, you had a 10% crash, and gold did exactly what it's supposed to do. Gold pulled up quite a bit nicely to compensate. So, example, if you're decently well diversified between gold and stocks, your crash on stocks would have been very nicely compensated by gold again. And before that, the period, I'm talking now to Raymond, if you were in stocks and had some gold, your stocks would have made up for your losses in gold. In other words, don't go 100% into the one or 100% into the other. Try to stay reasonably diversified. Okay, let's see. More questions. I think I was, first of all, did I cover all questions? Is there any question? Do you know
I think you jumped over one. The question
I missed. Yes, apologize. I missed apparently one question from Krister
yes.
from 1016. Do you know why M2 was doubled in early 2015? Yes, M2 doubled in 2015. There has been a massive crisis on the euro-dollar market. Euro-dollar market, there was massive shortages all over the world. Euro-dollar interest rates spiked big time. There were shortages all over the world. I mean, the main markets are in London and in Hong Kong and in Singapore. These are the major euro-dollar markets. It was such a massive shortage that they had to pour in huge amount of base money so that they can support the euro-dollar market. Otherwise, shooting sky high euro-dollar interest rates would have crashed more than estimated $100 trillion of debt. I repeat, $100 trillion of debt tied to the to the LIBOR, into the euro-dollar currency market. With shooting interest rates on the LIBOR, $100 trillion would have to be re-pegged to a higher interest rate. And that would have been devastating for the asset markets. So they had to pour in and increase the M2 money supply in order to bring down the LIBOR interest rates. So this is my good understanding. Let me try to remember. Euro-dollar university. I will type it. Euro-dollar university. Please search this one. It should have been about approximately 2 or 3 months ago. Let me open my phone right now. It will take me less than 10 seconds to see the reference. It is on Macro Voices. And if somebody searches for a name, there's a guy's name, I think Luke Grumman, I don't want to make a mistake. There's Euro-Dollar University is about 5 lectures, 5 audios, and these 5 audios are about the euro-dollar market, the history, the development. There's been a more recent development of the euro-dollar market. I highly recommended people to listen to these. They are very educational. Most professors in finance don't know, don't understand this stuff. I had to study this extensively. I teach a lot of this stuff, and I learned a lot from these particular recordings. Can somebody pull the name on Euro Dollar University, pull the name of the person? With Eric Townsend is the interviewer, and the expert on Eurodollar University. These are usually in MP3 forms, and you will get a lot more in depth. Also, I would like, yes, to thank the person who corrected me that it's not Jim Rickards, but it is James Rickards. Yes, this is the true, this is the correct name on currency wars. Okay, let's see what else we have. I have a good time. What is my view on cryptocurrency? Okay, cryptocurrencies in general, and I repeat, in general, not Bitcoin, have a bright future. Cryptocurrencies is where the future is. But when I say cryptocurrencies, I always repeat, usually 3 times, I talk about blockchain. I talk about the blockchain technology. Blockchain technology is extraordinarily valuable. Blockchain technologies is a game changer. Blockchain technology has a bright future, but it doesn't mean that Bitcoin has a bright future. Bitcoin is one single application of the blockchain technology. Then there is Ethereum, then there is whatever, then there are right now 1,200 cryptocurrencies. And if you ask me, like it was in 1994, 1995, well, does Internet have the bright future? The answer is yes. But which particular application will be the successful application? You cannot possibly know. You can't be sure that there will not be the next currency which is better than Bitcoin, and then a third currency better than Bitcoin. In other words, you can compare the blockchain technology and the cryptocurrencies to the internet, and then you can compare Bitcoin to a particular website. And one website, one web application could be successful, or it could be a failure. It could be successful for a while and then replaced by another better competitor. And the same thing applies particularly to cryptocurrencies. Bright future. Again, same thing about Ripple. Fast transferring system, yes. But again, it may be that the next best cryptocurrency will replace Bitcoin. It will replace Ripple. Again, at this point, it is very hard to know which particular cryptocurrency will be a winner. And for example, I'll just give you a good example. If the Swiss government has a Swiss crypto franc, and they say that it's protected by the government, it's as good as the Swiss franc, and it has a convertibility 1-to-1, I would be a buyer. I would love to have a crypto Swiss franc. Why? Well, I'm right now only 100 kilometers from Dubai. I want to send me some money to my dad. Sure, I'll shoot it over with a Swiss franc, and he can collect it, or he can keep it as a Swiss franc, or collect the Swiss franc from a local machine. Now, with a Bitcoin, I'm scared. By the time I get the Bitcoin, by the time I send the Bitcoin, by the time he cashes out the Bitcoin could have crashed 10%. Hard to know. So what I'm saying, and I'm having a very good point, if a particular central bank backs a particular cryptocurrency, especially backed by the national currency and with some gold, it may begin to displace other private or completely decentralized currencies. And this is what the Russian government is currently doing separately for a standalone Russian cryptocurrency. The Chinese government is doing the same. So again, the competition will be brutal. The future is bright, but trying to pick the winner, I don't want. I can't. No expert in the world. Now, you want to make money with cryptocurrencies? I got a good recommendation. Find a good, smart, sharp, sophisticated guy who knows everything about cryptocurrencies. He will invest in a portfolio of 20, 30 highly good cryptocurrencies, and hopefully he will make some money for you. You want to speculate in crypto? Good, go for it. You have some money to lose? Good, go for it. You want to be safe and protected? Stick to cash, stick to gold. Now, Norway has the third or fourth high private debt per household in the world. Yes, that's very true, unfortunately. Same thing applies for Finland. Same thing applies for most of. How do you think the coming rate increase will affect this situation? The answer is bad, very bad. Okay, private debt to GDP in Norway is 283. Yes, true, very high private debt. Norway has the blessing of relatively low government debts, relatively low future obligations of, let's say, US and most other countries have unfunded pension liabilities. Norway is one of the best funded pensions systems in the world. And that makes the overall economy slightly better than the rest of the world. Again, even slightly better, many people think, than, let's say, Germany. Of course, a lot better than Britain. Britain is a complete disaster. That's another topic for another day. Okay, do you think the coming rate into bursting housing bubble? Yes, of course. As long as you have a coming interest rate increase, sooner or later, it will burst the real estate bubble. We have a good estimate, and that's a good, it's called the rule of thumb. The rule of thumb is 3%. A 3% cumulative increase in interest rate affects seriously the real economy, affects seriously the stock market, and affects seriously the real estate market. So a cumulative increase of 3%. Now, personally, I've not followed the rate increases for the Norwegian kroner. Maybe somebody will write on the screen from what percent to what percent, because I follow all interest rates around the world, but I don't have them currently in my mind. How many times you have increased, and have you increased like all the others by 25%? For example, the ECB, Mario, hasn't pretty much raised interest rates at all. So will it burst? Yes, as long as the central bank goes up 2 or 3% cumulative, the interest rate bubble will burst. All right, let's see. Some central banks are holding gold. Yes, true, correct. China, yes. Russia, yes. While others like, well, why not? Well, some central banks, sorry to say, are not smart enough. Some central banks are not provident. Some central banks don't understand. Some central bankers may be under pressure from Big Brother UK, from Big Brother US, that you cannot have your gold and keep it with you. And others will not be subject to pressure. Russia will say, the hell with you. We will buy gold. We will have our gold. Even Germany cannot have its gold. They have it, but they don't have it. It is in, most of Germany's gold is in New York. I hope you understand. A good chunk of Germany's gold is in London. I still understand a lot of it is in London too. So even if they want it, they can't have it. Even if they're allowed to have it, but maybe Norway is too small to be allowed by America or other countries. Maybe they're just pressured not to have it. Even our Bulgarian government, we have a little bit of gold, and our gold is in Switzerland, supposedly in storage. And Swiss banks have given it to a whole bunch of God knows where they've used it. And if we want to have it, we can't really have it. So, yes, they're holding gold because they are preparing for the crash of the dollar. And when the dollar crashes, those monetary systems that have gold will remain standing. And Russia prepares, and China prepares. And for a while, Germany was preparing by repatriating most of its gold from other foreign storage locations. Okay, I hope that answers your answer. So number one, they're not politically motivated. Number two, they're just not smart enough. And number three, they're just pressured and not allowed to do it. Let's see, more questions.
There is a question from Bjorn we jumped over. If you can go.
What time? What time?
7:33.
33, 10:33. What is my current? All about central banks. Are they privately owned? Yes. The Fed is privately owned. The ECB is practically privately owned. The S&P is practically privately owned. I am honestly not sure about China. Honestly, I don't know the exact structure and the exact ownership and the exact control of the Chinese central bank. I honestly don't know. But almost all, let's say most central banks around the world are well known to be privately owned. And for most of them, the Rothschilds seem to be behind all of them. All right, so what do I think about the gold-silver ratio? The short answer is I think right now the gold-silver ratio is extremely high, unusually high. I believe that while gold is undervalued relative to stock and relative to real estate, silver is 2, 3, or 4 times undervalued relative to gold. So I think that right now the timing is absolutely perfect for buying silver. And I believe right now the timing for silver is slightly better than gold. And you will tell me specifically for Norway, do you have a VAT on silver or not? If you don't have, I recommend silver more. But if the VAT, I say, well, get some, but better don't pay the VAT. Depends how much is the VAT. In Bulgaria, it's 20%. I don't want to pay 20% in Bulgarian VAT. I don't want to do that. I mean, when I was last time in Estonia, I bought some silver, and but it's without VAT. Say, oh, I love it. I'll buy it. If that answers your question. Is Switzerland a safe harbor during a crash? Please specify the meaning of the word safe harbor. What does it mean? In Switzerland means what? Means from a war, means that if European banks shut down, that Swiss banks will not shut down, or it means you have a safe deposit box in a Swiss bank. Will they allow you to access your, in what sense is a safe harbor? In general, is an economy that the economy will not crash. Let's see. Okay, no VAT on coins in Norway. Is this true for silver coins too?
Yes, yes.
Oh, that's true. If I were, I would honestly, enthusiastically recommend buying a lot of silver coins. I'm talking about the kilo coins. I'm talking about the kilo. What about bars? Is there a VAT on bars?
Yes. Yes.
Oh, well, that's the case. Very easy answer. Buy the kilo coins, right? The kilo silver coins. Man, that's a great buy. Just load them up, bring in the truck and load up. Okay. So let's see. Big names are telling us that the global financial crisis will happen no later than 2020. Well, I would guess with the first big earthquake in February, the big crash will be happening in just a couple of months. Now, from the earthquake in February 2007 and later July, August in 2007, until the crash was in 2008, the lag was about 13 months. So now we may have a 13-month lag, but we may have only 6-month lag. We may only 3-month lag. Again, it's very hard to predict from this first VIX shock. We cannot predict exactly the transmission mechanism, whether it's going to be 3 months or 13. But if I were you, I wouldn't risk it. And I'll tell you guys, I sleep very well. I don't worry what crashes, how much, and what not. So Jim Rogers, Mike Maloney, okay, Peter Schiff, yes, they're all telling us, yes, will happen no later than 2020. I would say, my good, intelligent, educated guess, it would be happening based on the February events and based on the VIX spike from 10 to 50. I would say it's going to be happening anywhere in the second half of this year. Again, exactly when, hard to know. I wouldn't know. How? I don't know. Yes. Silver, okay, safer than the country. Open private banks, not Credit Suisse, but cantonal banks. Okay, if you just want to keep your money in a Swiss bank, yeah, I would do that. I would actually, again, question is how much you have. If you have 5 or 10 or 20,000, don't even bother, going to Switzerland. If you got 1 million euro, yeah, you can put in 100,000 in a Swiss bank. It's a diversification. You should diversify not across asset classes, stocks, real estate, gold, cash, possibly bonds. You should also diversify across different jurisdictions. Put some in US, well, put some in Dubai, put some in Singapore, okay? Depends on what your wealth is. If it's 100,000, 200,000 euro, don't bother too much diversification. But if you got $1 million or 2, you should put it in 2 or 3 different countries. All right, maybe I have some good offers for us this evening if you want to buy Kilsio. Oh, I don't know about the offers. I just found right now. Please ask
We will
Tavex.
let
Maybe
you know.
Okay.
We will let you know very soon.
Okay, I don't know anything about the offers, but if there are differences between tax differences between bars and coins, I wouldn't understand why anyone would buy a bar unless you buy the huge, what is it, 20, 30 kilogram, like the 1,000 ounce bars, because it's just one big chunk, okay? And then it's a lot harder to steal, a lot harder to get. I mean, very actually hard to lift. But that's a different story for another time. Again, I don't want to say anything good or bad, but again, personally, I'm very puzzled. You got the coin, nice, beautiful kilogram, and then a bar. Why would anybody ever buy a bar when you have to pay the VAT when there is the coin without the VAT? But that's a different subject for a different story. I never understood this. Probably Tavex will one day explain it to me. If anybody's buying a bar, why would they buy the bar and pay for it when the coin is tax-free? Okay, any more questions?
We have one question in QA. Keeping cash outside the bank, could you explain some more? What do you mean by keeping cash outside the bank?
Oh, you just keep it in just keep it under the mattress. Just put it in a jar and close the jar. There are 100 different ways to hide cash. People ask me always this is the best question. Where do I store my gold? And I have a beautiful answer for this. You got 1 billion Indians, 1 billion Indians, and 500 million Indians own gold. Where do 500 million Indians own gold? Where do they hide it? Next, you have about 500 million Jews, or 400 million Jews. 300 million of them own gold. Where do they hide their gold? You have 1.5 billion Chinese. 300 million Chinese own gold and hide it. Where do they hide it? Where did your grandmother hide gold? I know where my grandfather hold gold and silver. I'll tell you. He made a nice fire when he was cooking the place. He made it out of this. He put a big pit there, he hid the gold and the silver there, and this is where they cook every day. Lunch and dinner that they cook on fire. So it was half a meter below the ground. They cooked on fire. My grandmother was always there cooking, and during the winter, they were all around the fire. They were there 24/7, 365 days under the fire buried. Another place to bury gold. In the outhouse, we have a toilet. We have a toilet in the outhouse, okay? So we have a house. You put it inside the toilet, okay? Literally, you dip it 2 meters in the shed. No one's gonna go swim in the shed to take it out. And better in Norway, it will freeze. They can't dig it out of the ground, okay? It's frozen for 8 months of the year. Nobody, I mean, they need to come with an extraordinarily powerful equipment to dig it out of the ground. Okay, I'm just giving you 2 examples. So where you hold cash, well, there are hundreds of different places to hold cash. You just put it in, in books. Okay, you put it in the books, and you just tape a little bit the 2 sheets. Again, people don't know that it's in the book. It's in this particular book on page 120. They can't possibly find it. There are hundreds of different places where to hide it. Usually, you hide it structurally in a house. Let's say you got the door, you take the frame out of the door, you put the cash, you put the door frame in. Again, structurally in the house. They should be able to rob your whole house. They can keep your house clean. You come home, the whole house is empty. The cash and the gold should stay in the house, under the floor, or some structurally in the chimney where robbers can't find it. And cash is easier to hide than gold because metal detectors don't hold it. But again, how to hide gold and cash is a subject of its own. Would you say it's to store precious metals, private vaults in USA? No, definitely not. During an oil crisis, no, don't keep it. No, it's your money is most endangered. You want a risky place? Put it in US. No, this is one of the worst places in the world. Probably London will be a slightly better place. Probably a private vault in Switzerland will be. I would actually, believe it or not, personally, but it's a personal opinion, I would actually trust the Swedish government. I don't think the Swedish government is going to go for your gold in the bank. But you want a decent place? Hong Kong, Singapore. And now you can fly straight to Hong Kong, and you can put it at Hong Kong airport. In Singapore airport, they have storage places, meaning private vaults. Hey, why not? If you're going to be diversifying your storage, some in Dubai. Not a bad idea, okay? Let's see. Could we face a gold confiscation by the government in European? Yes, there is some risk of confiscation. I'm also partially worried about some gold confiscation in European governments. So that's one of the reasons that you gotta keep it outside the banking system, bury it somewhere structurally in your house, somewhere in your land or whatnot. And so forth. Oh, another great example comes that just came to mind. How they hide gold. Make it in the yard, put it under the ground, and put 10 or 20 bee hives, and the bees sting. People can't approach the area because there will be bees. In other words, they gotta know there's gold there, okay? They gotta know how to handle the bees and all sorts of stuff. All right, is there to keep going longer than 20? Okay.
It was for me because we are over time soon, but there are so many questions coming, so don't answer to it.
Okay. Look, we can go a few more minutes. If people have good questions, I feel good. I feel wired.
There is one from the Björn before me. Did you answer it? Could we face a gold confiscation? Did you see it?
Yes, I already explained.
Okay.
Yes, okay. There is a risk. There is always a risk of a hungry government. Where the risks are highest? Highest will be in Italy, Spain, Portugal, Greece. In other words, Club Med, the Mediterranean countries, risks of confiscation are highest. Lowest risks will be in Nordic countries. Britain is possibly high risk. Germany, very hard to tell. I cannot, you need something. Germany is the hardest country to read. But my concerns will be lowest with the Nordic countries. Hey, diversification. Maybe you'll be safe in your case to store in Iceland. Geographic diversification. If you don't want to go all the way to Hong Kong, Singapore, or Dubai for storage diversification, maybe Iceland is a good choice. Okay, questions?
Yes, we have two more questions. Back to the one you asked. Why should we keep money out of the bank system?
Well, I already told you. I already explained. If your money is in the banking system, they can close the bank on you anytime. The government can say something bad about you. They block your money. You cannot hire even a lawyer. You become totally protected. Just think a little bit, if your bank accounts get frozen now, what can you do? How you can buy food? How you can go home? How you can buy gas? How you can move? How you can travel? How you can eat? You're totally dependent on the system. You want to have a good chunk between one or 2 years of cash. You need to have reserves in cash outside the banking system. If anything happens, you can run, meaning buy food and electricity and basic living expenses for at least 1 year. You need to have it in cash. You don't want to risk anything. And suppose the government says, you're a criminal. They saw you with some person. You're a criminal. They freeze your account. You're hopeless. You're defenseless. You cannot do anything against your government, okay? If your money accounts are frozen. So you definitely want to keep a good chunk outside for your safety, for your protection. Let's not forget that one of the countries with the best property rights against confiscation was pre-Nazi Germany. The German society had iron laws, there was law, there was order. Concepts like confiscation, concepts like Nazism would have been unthinkable just 5-8 years before Hitler came to power. Actually, before Weimar Germany, before World War I. These things would have been unthinkable. And think what Germany transformed itself from, let's say, 1913 to 1923 or 24 until Hitler came to power. So this could see. So the banks can't close. Our seller goes into bank. Please call Greece. Please. The Greeks had their salaries going to the banks. The banks can't close. Sure they can. If the money is not there, of course they would close. The Greek banks close. The Cypriot or the Cypriot banks close too. What do you mean they can't close? Without cash, it's very easy to close. I mean, there is no bank. There's nowhere to go. Yeah, I'm honestly puzzled when they say the banks can't close. They can close at any time. They can close tomorrow morning. Okay, now in your case, the government could possibly print the currency and give it to the bank, but it will just result in a currency depreciation. They can get your money, but it will be severely depreciated. But I'm very surprised when people say the banks can't close. I mean, sure they do. I mean, banks closed in America. Why wouldn't they close in Norway? The banks have before closed in Britain, sure, many times in British history. Why wouldn't they? The Greeks have their money in their pockets now. I've never seen so big rolls of money. Correct, yes, of course. But they have it after they got burned. And that's my point. Thank you very much for that second comment, Raymond. Yes, they got it after they got burned, after the banks closed, after they could not access their money from the bank, after they said you can withdraw only 60 euro per day. Yes, so the Greeks now have it, but they lost a lot. Same thing with Cyprus. And all I'm saying, don't become like the Greeks. Be prepared. Stay with a good chunk outside of the financial system. So if things go bad, you are prepared. Jamerick has explained the Iceland project. Yes, correct. And everything would be frozen and shut down for longer, from a month to 6 months. Yes, correct. When the banks open again, I just answered the answer. 3, 6, 9 months, as long as they are able to legally and procedurally reset the banks, anywhere between 3, 6, and 9 months. And if there's an ice line, believe me, Norway will be affected just as much as Greece, as Germany, as France, as UK, and the rest of the world. Yes. And they still do, because of the increase in taxes, the black economy is still increased. Yes. Oh, the future there is black. The future in Greece is bad. The question is, when you compare your economy to Greece, how much better are you? In terms of government debt, you're a little better. In terms of personal debt, you're just as bad as Greece. In terms of corporate and business debt, you're just as Greece. So, in terms of a real estate bubble, you're worse than Greece. So, yes, you're slightly better than Greece, but not a lot better. Slightly better than Greece, but not a lot better. Well, Norway is slightly better than all of Europe, but that's, again, a different topic. So, and still do have, okay, increase in tax in Norway, bank security fund. Please, believe me, don't trust bank security funds. Bank security funds are usually empty. I'll tell you about the American Bank Security Fund. It's less than 0.1% of all deposits. 3 big banks gone, and the security bank fund in America is gone. In Bulgaria, the security fund has exactly funds for 1.5 small bank. If a mid-sized bank goes bankrupt, the fund goes bankrupt. Now, it gets better than that. The security fund invests its money in the commercial banks. This is insane. So the security fund puts the money in the commercial bank. If the commercial bank goes bankrupt, the fund is bankrupt because the money of the fund is in the commercial bank. Okay, do you understand the circularity? Okay, anyway, they can guarantee, oh please, I will guarantee today, now, to each Norwegian, 1 billion. 1 billion. Do you trust me? The answer is no, you don't trust me. A guarantee is worth only as much as capital behind it. A bank can guarantee 1 trillion, but if they have a little capital, it is not worth much. In other words, they can guarantee 10 million, they can guarantee 100 million, they can guarantee 1 billion. It doesn't matter what they guarantee. The only thing that matters is how much capital they have, and the capital is in the form of cash outside the banking system and outside the government. Liquid, available cash. When a bank goes bankrupt, the fund can use the money to cover it. And if you look, you will find out that, like any other security fund, the Norwegian banking fund, I don't know about a lot of security funds, they are underfunded. Usually between 0.1 and 0.5%, and not enough for 2 or 3 mid-sized banks. Is there any hope for SDR? No, there is no hope, because there is no government that stands behind, and there is no future. You don't want SDR, I don't want SDR. SDR is in pretty much nobody's interest except for the international elite, except for the Davos crowd, except for the some international bankers, and maybe just the ultra elite in the IMF. The IMF loves FCR. Okay, nobody else, no bright future. No, the Russians won't stand for it. I doubt the Italians will stand for it. No. How does the supply side look for gold? Okay, supply side actually is tight. On supply side, I will recommend the following. I will type it. Shift gold report, but type this please on YouTube channel, not on Google, on YouTube, and there is a Shift Gold report, and Shift Gold report is, I think, a full channel. I'm actually subscribed. Every week I receive it. Shift Gold report is beautiful because it's only 10, 12, 13 minutes per week. Only once per week, only coming on Fridays. It is a very well summarized. If you're into gold, I highly recommend that you subscribe it. 10 or 15 minutes of a weekly summary, a little bit of markets of gold. They go a lot into supply and demand, and just last week they reported on to specifically the supply demand market conditions for gold. So overall there, and they went into very good numbers of supply, of demand, and what is now known as peak gold. And peak gold is a concept very similar to peak oil that we are approaching, or that we're close to, the highest possible annual supply of gold. An annual mining supply of gold is tiny. It is barely less than 1% of total supply of gold. That's the annual increase in gold. And overall demand is good. Overall, hey, here they are. I'm in Dubai. They are crazy about gold. My Filipina girlfriend, she says, I want gold ring. Oh, then I want gold earrings. And then she says, oh, I want gold, what was it? Gold earrings. Oh, gold necklace. And then she says, now I want a gold pendant. So I've been buying and buying and buying gold. I mean, they're 1 or 2 grams, but they're all like that. They want gold. I mean, Philippines, Thailand, India, China, the Arab world, the Jewish world, they're all crazy about gold. They all want gold. I'm here, my students, they all wear gold Rolexes, only gold-plated Rolexes, where I'm teaching here at night. They don't respect anything else, only gold. I hope you understand. So, are all central banks, including Norway, raising interest rate just to be able to lower them again? Yes, this is kind of like, yes, that's what Jim Rickards says, and yes, that's basically also my belief. And they should have done raising interest rates 5, 6, 7 years ago. They should have done it. The crisis was in 2008. By 2010, 2011, they should have begun raising interest rates. They desperately need to, it's called in English, to reload the chamber. In other words, they need to raise them in order to be able to lower them. Because if the next crisis comes, when it comes, and the next economy slows down, the first main tool for the last 100 years of central bank monetary policy has been lowering interest rates. And confidence could very quickly evaporate if they start out with 1% and there is no room to lower. At that point, there may be a loss of confidence. And again, 1% interest rates, again, let me clarify. Raising the interest rates so that they can lower them is not the only reason. There is a second reason. Ultra low interest rates, very well understood, causes stock market bubbles, practically all over the world. Real estate market bubbles, practically all over the world. Junk bond bubbles, market bubbles, all over the world. In other words, these low interest rates, they're causing a whole bunch of bubbles all over the problem, a whole bunch of financial problems, and they need to raise the interest rates anyway, meaning to normalize interest rates. They can't keep interest rates ultra low forever. Sooner or later they have to do it. They didn't do it sooner, 1 or 2 years, when they should have in 2011. So they're trying to do it 2018, 17 and 18. Yes, Gene Rickards is partially correct, but central banks recognize all the bubbles, and they recognize all the problems, and they recognize that low interest rates are too much trouble anyway. Okay, let's see.
Do you think we can enter an era where future generations don't see any value in gold?
Yeah, again, please repeat. If?
Do you think we can enter an era where future generations don't see any value in gold?
Of course they will see. This is the culture here. This is where I am. People here understand only two things. They understand only gold and real estate, nothing else. I lived for 2.5 years in Thailand. They understand two things: gold and real estate. I lived in Cambodia. Cambodians understand two things. For Cambodians, stocks don't exist, bonds don't exist. There's only two things: gold and real estate. You go in India, ask Indians about stocks. They don't understand stocks. They have no clue about stocks. I can't find a single student in a finance program here now. I'm teaching finance who understands stocks and know what stock is. And they have a good idea what bond is. They all know gold, they all know real estate. So you go to India, you go to China, you go to Thailand, you go to Vietnam. I lived a year in Cambodia. You go in China, 99% don't know about stocks and bonds. They know only gold and real estate. So believe me, half of the world, well, more like 3/4 of the world, they don't understand financial assets. They understand gold and real estate. So as long as you have 3 or 4 billion people in the world that understand gold and real estate, there will be good, solid, strong demand for gold. Now, Americans may be brainwashed, sure. Some other civilized people may be brainwashed, but 70 or 80% of the global population understands only two things, and you can't convince them about anything else. If that is answering your question?
It was not mine, it was present.
Okay, more questions?
We are actually over time, so maybe we just give last chance to ask questions and then we...
Okay, last chance for questions. And don't forget, Tavex still needs to have an offer on those silver kilo coins.
Yes, yes.
But I don't have any part with it. I don't know anything about it.
Okay.
Okay, any more questions? If there are no more questions, maybe we can close the discussion. Okay, maybe we can prepare another one in about 2 or 3 months, a similar webinar. Maybe we can have more people to participate. Maybe they will have a few more questions. Maybe some people for the audience can suggest topics, and hopefully in a couple of months we can make it again. Or better, for the summer, I'll come to, was it Oslo? And present live in Oslo.
You can.
Okay.
It feels like it's mostly over for today. So I would present our offer for today. I do it in English, so you can join us, Krasimir, as well. In our homepage, we will send you links by email, but we have something called for investor picks. And investor picks are already packages which we have been given great discounts, but we are giving more for all you who were joining us tonight. So you will get 0.5%. 0.75% discount on these packages on investor picks. And you need to use the code word ja til kontanter. You will all get it in email as well, so you don't need to remember all details, but this is our offer to all you. And I hope you will feel happy about it. And now I have the last task to you, Krasimir, in order to figure out who is getting this surprise.
Okay.
Could you please tell me a number between 1 and 53?
Oh, the middle number. Pick the middle number. So from 1 to 53, if you divide 52 is 26, so the 27th.
27.
The middle. The 27th person. I mean, I could have picked number 2 and that would be me.
Yes. Okay, you say 27.
Yes, but if there's no 27, I'll pick number 2. That will be me, so I can get that one too.
Okay, then I ask, is Øyvind Moe with us? If he is, he will be the lucky one. If not, we will find a new number.
Well, if not, I'm not looking at the numbers. I'll pick a second reserve number. 13. 13 will be the next number.
13. Okay.
The second reserve. If the first one does not show up or is gone.
Yeah, Øyvind hasn't shown up. So if we take 13, I would like to ask Susanne Løvmo to wink to us. Is Susanne Løvmo here? No. Sorry. So let's take the third chance.
All right. Well, let's get an early number, like number 3. If it's not a Tavex or internal person, who's the third? Who's the early bird?
The third one is Andre Gjertsen.
As long as that person is a guest. Well, why don't you give it to the person who asked the most questions? All right. Okay. Number 3. No?
No?
Let's try one more and then.
Okay, let's try just last one.
And then the most likely one can get it.
You want me to pick another number for you?
The last one, and if the person don't show up, we will figure out who was asking the most of questions.
Okay, please do. Oh, Raymond says he agrees. Barsti says it's okay that he can take it.
Nice to hear.
Oh, they're joking, right?
Yes.
Okay.
So last number, please, Krasimir.
Oh, one more number. Okay.
Yeah,
How
the
many?
last one.
The
last one.
Let's try 37. 37. Okay.
37. It's
okay. I'm just picking. It's called odd numbers.
It's Henriette Horn.
If not the next one, I'm picking randomly immediately number 4.
who you are.
Okay.
Okay, who's number 4 then?
Number 4. Okay, this is the last one, really. Number 4 is Björn Stahel. Yes. Okay, this is yours, Björn. Congratulations. It will be posted to you tomorrow. I don't really know what is in it. Okay. We thank you all very much, and especially you, Krasimir, for this really exciting and interesting evening. And to all you, many thanks also. And you will get email from us with all information needed in order you are interested in our offer. And this offer will be valuable. You can use it until the end of the March. So you have a couple of weeks for making your choice.
Yeah.
Okay.
And don't forget to order an airplane of kilogram coins, silver coins, because you might run out of them before you know what happened.
Okay, we all do our best. Thank you very much, Krasimir.
No, otherwise, I simply recommend the 1 ounce gold coins. If you're buying gold, just buy the 1 ounce gold coins and put them in the little tubes. That's the way to go about it.
Yes.
Okay, thank you very much.
Okay,
thank you.
Have a nice evening, and bye-bye to everybody.
Bye-bye. I will stop sharing, okay?
Yes.
Okay, and I'll go, yes, and I'll go home in about 3-5 minutes. Okay, bye-bye.
Okay. Tack till allesammans.